Well, thank you, Carlos, for giving me an opportunity to introduce Dan Montgomery, our next speaker. I've been trying to get Dan here at our meeting for the last couple of years, and he chose Washington D.C. over Maui, Hawaii, last year, and so you got to take anything that Dan gives you here today with a little bit of grain of salt, given that judgment. But no, we're happy to have Dan here with us. He's an extraordinarily busy individual. Dan is the deputy chair of the IAASB. That acronym is the International Auditing and Assurance Standards Board. Yes, I have gotten to know Dan over the last several years as I've represented NASBA on the consultative advisory group that meets twice a year with the leadership of the IAASB. I think Dan is going to spend a few minutes talking to you about the role of the IAASB, how it might interface with our own Auditing Standards Board, and he's a former member of that board. And I think what you're going to hear is what's coming down the road internationally is probably what we're going to be seeing here in the U.S. in the next few years. It's on the horizon. The PCAOB has similar projects to what is going on at the IAASB. And right on the front stage right now, and what we're going to hear about today, is a new audit report. There's been a long period of time when people have been critical of the current audit report and the lack of the information that is conveyed on all the work that auditors do, and then communicates to the users of financial statements and how it might be more informative. So Dan has led that task force at the International Board, and over a long, arduous process, they have now approved in September that the final standard, it goes to what is called the PIOB, or the Public Interest Oversight Board, for approval, I believe, in December, if I'm not wrong, Dan. He is a senior partner of the Global Professional Practice of Ernst & Young, where he is the director of Audit and Assurance Standards, Methodology, and Implementation at that firm. So with that, I give you Dan Montgomery.
Well, thank you very much, Galen, for the introduction, and Carlos, thanks to you and NASBA for the invitation. It's a great pleasure for me to be here with you. And Galen, just to set the record straight, as my name tag does indicate, I am a first-time attendee, and I had hoped to be with this group last year in Hawaii. Unfortunately, my IAASB travel schedule did not permit, so I am indeed pleased to be with you here today. So I thank you for the invitation, but also wanted to thank each of you for what you do every day, such an important job on behalf of the profession, so thank you for that. As Galen mentioned, I am the deputy chair of the IAASB, the International Auditing and Assurance Standards Board. And just by way of background, the IAASB is an international independent standard-setting body. It sets on its own authority high-quality international auditing, review, other assurance, and other services standards, as well as international quality control standards. The IAASB is one of 4 standard-setting bodies that operates under the auspices of the International Federation of Accountants, IFAC, the global accountancy organization that's representing about 2.5 million accountants worldwide in about 130 jurisdictions. The IAASB is made up of 18 members, including a full-time chair. Professor Arnold Schilder from Netherlands is the chair, as well as 17 other volunteer board members like myself. And the split of the 18 is about even between practitioners and non-practitioners. The board follows a very rigorous due process for setting standards that is approved by the Public Interest Oversight Board, as Galen mentioned, and the PIOB also oversees the board's activities. The board receives input and advice on its agenda from the Consultative Advisory Group. As Galen mentioned, he is a member representing NASBA, and it's a group of about 30 influential organizations from around the world that provides the necessary input and advice for the various projects. The board's international auditing standards, the ISAs as we refer to them, have been adopted now by over 100 countries worldwide, and that includes the United States. The AICPA, as a member body of IFAC, is committed to the adoption of the international standards on auditing, and in fact the ISAs serve as the baseline for the auditing standards of the Auditing Standards Board for non-issuers in the US. So that's the background on the IAASB. And, but what I'm here to talk to you today about is, as Galen mentioned, a very important development. Probably one of the most significant developments in the auditing profession in the last many years. Certainly, I've been in this business almost 40 years. I'll be retiring in a couple of months. And in my time in the profession, this is certainly one of the biggest changes that I have seen. There have been various refinements to the auditor's report over the past many years, but in fact, in the US, the auditor's report, the standard auditor's report, really has not changed substantially for about the past 70 years. And it's not much different worldwide. There have been many jurisdictions around the world that have started and some have ongoing initiatives to change the auditor's report. But the approval of these standards by the IAASB represents a significant step forward in that regard. I have a set of slides that I will use. They're purely for reference purposes, and if I can figure out how to work it. There we go.
There you go.
The agenda, if you will, for my presentation is really to give you a little bit of input and background on the why, the what, and the when. Why change? What kind of change would we see, and when can that change be expected? The project that I have had the pleasure of leading at the IAASB started really more than 6 years ago, but it started with the commissioning of academic research jointly by the IAASB and the US Auditing Standards Board. And that academic research was intended to look at user perceptions of the standard auditor's report. Does it provide useful information or does it not? And there were 4 academic research reports. The research reports came in along about 2008 or so, and the task force initially had a look at the results. And there were some interesting developments in there in terms of what users said about the usefulness of the standard auditor's report. Along the way, the IAASB was also paying attention to developments around the world, and there were some significant developments. In France, they had an auditor reporting model that had provided some additional information about the audit starting in about 2003 or so. There were some developments in the UK, throughout the European Union, some developments in the US, Australia, and other places. And that was providing additional momentum for change to the auditor's report. And along about 2007, 2008, 2009, the global financial crisis came along and added even further momentum for the change. That led to the first of 3 public consultations by the IAASB. You can see on this slide one in 2011 one in 2012 and an exposure draft of revised standards in 2013 that led to a tremendous amount of discussion on an accelerated timeline by the IAASB and led to the approval of this revised package of standards at the September meeting in New York. A little bit of the background. Why change? Why change the auditor's report? The academic research, along with the consultation process, public roundtables, and the individual outreach that the board had done with various stakeholders around the world, indicated that users said the auditor's report was important. What they valued the most was the pass-fail nature of the auditor's opinion, but they said beyond that, the auditor's report really didn't tell them much about the audit. And in essence, they said, from our perspective, the audit is a black box. The auditors have great knowledge of the company, of the industry. They work every day with management and audit committees. And isn't there something additional that auditors can tell users of financial statements about the audit that was performed? That was the basic impetus behind the change. Also, we're going through a change, as you all know, increasing complexity in the financial reporting environment. Financial statements are becoming more complex, greater use of fair values and other significant estimates, and again, leading users, investors and other users to say, we would like some insight, greater insight from the auditors about the audit that was performed to help us to better understand some of the key areas of the financial statements, some of the key audit judgments that were made in forming the opinion on the financial statements. Importantly also, the global financial crisis triggered some very key questions about the quality of audits worldwide, and even more important, about the relevance of the audit and the relevance of the profession. There were many in my travels around the world that had said, on the heels of the global financial crisis, there were instances where companies, financial institutions, either failed or needed to be bailed out with public money, and investors and others were saying, as they often do, where were the auditors? And if the auditors couldn't provide some information, give us more information about the underlying condition of the entity, then what value is the audit? So this was a way to get the audit to be more at the forefront and to provide some additional insight about what the auditor does. So, what is different? The one thing that investors and other users said across the world was, because we value the opinion, why not put the opinion first in the auditor's report? By and large, the one-page, three-paragraph or so standard auditor's report started with a scope paragraph, a little bit about the audit and the opinion last. And by and large around the world, with some exception, that's the way the report is presented. So the IAASB listened to this feedback and said, in the international auditing standard, we will require the auditor's opinion to be presented first. Probably the cornerstone, or I'll say the crown jewel of this project, is a new section in the auditor's report, initially for listed entities only, called Key Audit Matters. And I'll go into a little more detail here shortly on what that is. Investors and other users, regulators, corporate governance folks and the like around the world also said, especially in the wake of the financial crisis, we would like to see a little more attention given in the auditor's report to the topic of going concern. And the IAASB spent a considerable amount of time thinking about that, how best to do it. As I'll show you in a moment, we've come up with some additional changes there as well. There ultimately will also be a section in the auditor's report dealing with other information, information in an annual report outside of the financial statements, management's discussion and analysis, for an example. That is the subject of a separate project of the IAASB that is ongoing, and the idea would be the reporting aspects of other information would be dealt with in that project. Once that is finished, it will align then with the effective date of the auditor reporting standards. And then certain other refinements, including a statement, an explicit statement about the auditor's independence and other ethical responsibilities. Somewhat controversial in the U.S., but not so much outside of the U.S., a requirement for listed entity audits, again, to name the engagement partner. This is something that has been common practice in many jurisdictions around the world, and in the public interest, the IAASB felt that it was important to add that as a requirement, again, for listed entities. And then an improved and enhanced description of the responsibilities of management and the auditor, including a little bit more about the key features of the audit. I mentioned, and it's a little bit hard to read on these slides, but you have these slides for reference. You can refer to them at your leisure. But this new Key Audit Matters section would be required, as I mentioned, in auditors' reports for all listed entities. Essentially, these are matters, in colloquial terms, that would keep the auditor awake at night. It's drawn from matters that are discussed with an audit committee or those charged with governance, and it's the matters of most significance in the audit of the current period. So what types of things would be key audit matters? In the standard, there's a decision-making framework for auditors to identify or determine what these key audit matters might be. Auditors would be required to consider three things: areas of higher risks of material misstatement or significant risks in performing the audit, significant areas of significant auditor judgments in the financial statements, and the effect of significant events or transactions during the year. So in most cases, these key audit matters would be related to significant or complex matters that are already disclosed in the financial statements, things like asset impairments, valuation of financial instruments, accounting for significant acquisitions, or other areas of estimation uncertainty, revenue recognition, those types of things, the big ticket items in the audit. But key audit matters would not be limited to matters disclosed in the financial statements. For example, if there was a significant system conversion or implementation during the year, caused the auditor to spend a considerable amount of time dealing with some issues, dealing with some additional internal control matters and the like, that indeed might be an area of identified as a key audit matter. In the report itself, the auditor's report, as I mentioned, would start with the auditor's opinion. There would be a basis for opinion, for that opinion section, and then in most cases, then the key audit matters section, which would include some preamble language, basically describing for users what key audit matters are. And then for each key audit matter identified, there would be a description that would talk about why the matter was determined to be one of most significance in the audit, as well as how the matter was addressed in the audit. And there's a fair amount of flexibility for auditors in terms of how the matter was addressed, how to describe how the matter was addressed, and the level of detail that might be provided. But nonetheless, investors and others around the world were very clear that they wanted more than a simple reference to a footnote in the financial statements describing this key matter. They wanted to know a little bit more about why the auditor believed it to be such a significant matter and what the auditor did to address it. So would every significant matter that the auditor dealt with during the course of the audit always be communicated as a key audit matter in the auditor's report? And the answer is no, that in some cases, and this was based on comments that the IAASB received on consultation, a need to give the auditor some flexibility to say, this is not a matter that should be communicated publicly. And so there's a provision in the standard that would say that once a matter is identified as a key audit matter, it should be communicated unless law or regulation preclude the public disclosure, or in extremely rare circumstances, the auditor determines that a matter should not be communicated because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of the communication. So in other words, what the IAASB is saying is, if there's a matter that was of significance in the audit, automatically there is a presumed public interest benefit for users to know a little bit about that matter. The flip side to that is there may be some things of a more sensitive nature for which management isn't required to make a disclosure. A good example would be a suspected fraud or an illegal act, a suspected illegal act, where the auditor has spent a great deal of time and attention during the course of the audit dealing with that matter, investigating it, talking with the audit committee and management about it, ultimately concludes there's not a problem. So by definition, it likely would be a key audit matter, but management may not be required under the financial accounting framework or by law or regulation to make a disclosure. And therefore, if the auditor were to communicate this in the auditor's report, it would be providing this type of information publicly for the first time. And at least the standard gives the auditor a way to think about that. I will say, however, that the presumed public interest benefit hurdle is quite high. And that was something that regulators and the board's consultative advisory group indicated had to be a part of the requirement, that the threshold had to be very high for an auditor to determine not to communicate something. And you see some other, on this slide, some other more technical aspects of the key audit matters disclosure. There would be some additional documentation requirements for auditors in terms of why certain matters were or were not considered to be key audit matters. And in the existing world, we already have, as auditors, a provision to communicate certain things through emphasis of matter or other matter paragraphs. Those would survive. They're needed for non-listed entities in any event, but even for listed entities, they would survive and will coexist with the concept of key audit matters. In terms of some of the other changes to the auditor's report, I mentioned this, the opinion would be followed by a basis for opinion section. You see on this slide some of the specific words in that section, but importantly, what's highlighted in red is this explicit statement about the auditor's independence that I mentioned earlier. This was something that, in particular, audit and securities regulators around the world said there needed to be a more explicit statement by the auditor in the auditor's report about the fact that the auditor was independent and had complied with other relevant ethical requirements relevant to the audit in that particular jurisdiction. And This goes beyond the current state today, which is a simple indication that the auditor is required to comply. This is now making the auditor explicitly state in the auditor's report, in fact, that they are independent and have fulfilled the other relevant ethical responsibilities. And some, during the consultation process, said, why is this needed? We already have a title on this report that says Independent Auditor's Report. Why do you need any more than that? The why is because there have been some instances where there have been breaches of independence and other ethical requirements, and therefore the regulators thought that this type of explicit statement would be helpful to drive auditor behavior in this area. Okay. There we go. I mentioned an expanded responsibilities section. In the current auditor's report, the reference to management's responsibilities for the preparation of the financial statements and for internal control is relatively brief. That statement will continue, but I mentioned the area of going concern, and for those that wanted the auditor to say a little bit more about going concern, equally there were some that said if the auditor is going to do that, it's important for management to say a little bit more about their responsibilities for a going concern assessment. And so the words again on this slide would indicate some additional language. This is based on IFRS, but it could be tailored depending on the individual financial reporting framework. And then finally, there's also a very brief statement, but at least a reference to the oversight of the financial reporting process, and in this case, the fact that an audit committee or those charged with governance are in fact responsible for that oversight. With respect to the auditor's responsibilities, just a couple of key things to point out on this slide. One is, in the consultation process, users said, we want to know a little bit more about what the auditor does, what an audit is, the key features of an audit, and try to do it if you can, in plain English, and provide some additional information about certain key concepts that the academic research initially said there was confusion among users as to what some of these terms meant. Terms like materiality, reasonable assurance. And so the IAASB had endeavored to try to come up with some words that would do just that. Still a little bit technical, I will admit, but tried to do it in as much a plain English fashion as possible. A couple of other specific references, and again, you'll get the idea that this responsibility section is getting to be quite long, and that is true. There were some that said, all you're doing is adding more boilerplate to the auditor's report. The flip side to that were users and others that said, we really don't care. What we want to know is a little bit more about the audit and what the auditor does. You'll see a specific reference here to exercising professional judgment, a specific reference to maintaining professional skepticism throughout the audit. Terms that up to this point have never been a part of the standard auditor's report. A little bit more about the risk of fraud, and a specific sentence added here indicating that the risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error due to things like collusion and forgery and other things. So again, just a little bit more to try to address that expectations gap on fraud. You'll see, again, the corollary here to the management responsibilities on going concern, some additional language from on the auditor's responsibilities with respect to going concern. So the effect on practice. I think it's safe to say that with this type of change, there will be a significant effect on practice globally. This is a big change for auditors. It's the first time that auditors would have to actually provide some measure of detail in their auditors' reports about key aspects of the audit. And it will take some time for auditors to be able to determine matters, to write them in a way that will be communicating clearly and as concisely as possible for investors the nature of the matter and what the auditor had done to address it. But the other aspect of this is there are some things that auditors can draw from already. There's already a similar requirement in the UK. Auditors for about the past 18 months or so have been issuing auditors' reports under this new regime with this additional level of detail. A new requirement is going to kick in the Netherlands for 2014 audits, and it was also part of the audit reform in the European Union that along the 2016 or so time frame would be required to, these lengthier auditor reports would be required there. We don't really know what the outcome or the upshot of this will be, but because this is the key deliverable from the audit, the IAASB believes strongly that there will be some very positive benefits to helping investors better understand what the auditor does, better focus by the auditors on what they do, particularly what they're doing in these key areas of the audit, having a beneficial effect on audit quality, and certainly a more positive impression of the audit and the relevance of the profession by users of the financial statements. I mentioned that the AICPA, the Auditing Standards Board, uses the international standards as the basis for their auditing standards and for non-issuers, and likely the Auditing Standards Board, once the IAASB standards are released, will take up a project to have a look at the standard report in the U.S. for non-issuers to see how it might be changed. The PCAOB has its own project on auditor reporting. I'm sure many of you are familiar with that. It has been and will continue to be an important part of the PCAOB's agenda. And it includes a concept, critical audit matters, that's very similar to the concept of key audit matters in the IAASB standard. There are some other similarities, but a few differences in the current PCAOB proposal, and they are expected to have a reproposed standard probably sometime in the early part of 2015. So when will all of this happen? I mentioned the IAASB has a very rigorous due process that includes review by the Public Interest Oversight Board. That's going on right now. We expect that to happen in December. So the final standards would be released in January, about mid-January of next year. That will start the process for national standard setters around the world to go through translation and adoption into their standard setting regimes. But the IAASB standards would be effective essentially for calendar year 2016 audits. Earlier application would be permitted. And the IAASB, now that the standards have been approved and shortly will be released, will not stop there. We'll now move into the next phase, which is some significant activities to promote awareness and understanding and to support the effective implementation of these new standards. And then a couple of years down the road after the effective date, the IAASB will take on a post-implementation review. One final point here, and I won't go into the details of these, but there are some related projects. I already mentioned the other information project. It's International Standard 720 on other information, and a couple of other things that are very closely tied to the auditor reporting initiative. So there's plenty of information about all of this on the IAASB's website for any of you that might care to go out and have a look at that. So with that, let me stop. I will say that change in auditor reporting, the auditor reporting model, has been on the horizon for quite a number of years, and it is finally now here. Change was inevitable. It won't be easy, but I'm sure with the support of national standard setters and other organizations like NASBA around the world to get the message out, the importance of this change for users, for audit quality, and for the profession. The change will be difficult, but certainly not insurmountable. So thank you for your time, and I'd be happy to answer any questions that you might have.
We do have lunch at 11:45, but we'll take a couple of questions.
Yeah, Dan, again, thank you so much. But you had mentioned non-issuers. I'm not sure that everybody in this group would necessarily understand what a non-issuer is. And the second part of that question, Dan, if you could maybe touch on it, since this group really deals with private, we're not setting standard. We're not involved with setting standards at the PCAOB on public companies. Do you ever see a place for key audit matters filtering into the private reporting world? Is there any option for those types of companies to end up going down that path?
Yeah, thank you, Galen. Thank you for the question. And I probably should have mentioned a little bit more about both of those in going through. I probably wouldn't get the exact definition of non-issuers right. I'd probably need someone from the AICPA or the PCAOB. But essentially what it means is a split between public companies and non-public, or listed and non-listed. So the PCAOB's mandate is to set standards for public companies. There's some other aspects to that in terms of what is or is not an issuer, and standards for audits of other entities then are set by the AICPA Auditing Standards Board. I mentioned that the concept of key audit matters. First of all, this change in the auditor's report would be applicable for all entities, large, small, public, private, those that follow the international standards on auditing. But certain aspects of the changes would only be applicable for listed entities, that being the concept of communicating key audit matters and naming the engagement partner in the auditor's report. It would be, in fact, voluntary for auditors of other than listed or non-listed entities to communicate these key audit matters. And in some jurisdictions, we've already heard that they may extend the requirement to beyond just listed entities, to either a broader category of public interest entities, or even in some cases to private entities. Just as an example, we've heard from the banking and insurance regulators around the world that they believe this concept should be in place for audits of banks and insurance companies of all sizes in all jurisdictions. But that would have to be left up to the individual jurisdictions and standard setters and regulators there to decide. But interestingly, as the IAASB went through the consultation process, we spent a lot of time talking with the IAASB SMP, which is the Small and Medium Practice Committee, and the effect this might have on small and medium-sized entities. And there was actually split in the views. There were some that said, we don't think it should apply to them because it would create an unnecessary burden on auditors, on the entities, too costly, that type of thing. On the flip side, others said, we don't want a two-class system. And we think if this is something that is good for listed entities, for public companies, why wouldn't it be equally good for users of financial statements of non-listed entities?
Thank you.